G'day folks, it's Jim here from FX Charts. Welcome to a new week, Monday the 23rd of March. But if it was volatility you were looking for last week, you certainly weren't left disappointed. And it looks like being more of the same this week really, with a week dominated largely by US data. First up really tomorrow is important. We've got the US CPI. And then the durable goods on Wednesday, and the GDP on Friday. There's a fair bit of secondary data out as well. The global flash PMIs are all due out tomorrow, I think it is. Today might be reasonably range bound, but we are in some pretty volatile times. So we'll go and have a look and see what we can expect ahead. Right, so starting with the euro, having lost all its Thursday's gains on Friday, it actually recovered quite well on towards the end of the session on Friday. Got up to a high of 108.82 and has come back to sit on this 38.2 FIBO resistance level. Now this is an hourly chart. The indicators, the hourlies are somewhat positive, and the 4 hourlies are pointing north as well. So further gains in the short term do look possible. I don't think we're going anywhere too far today, but the market will wait for the CPI tomorrow. As we go further out, though, the dailies do look positive, and it does seem to me that we could be in for some further gains in the days to come as these continue to unwind. While I think the US dollar is eventually going to return to its uptrend, it seems to me that some of the more highly geared, highly leveraged euro short positions are going to come under some pressure, and we could feasibly head up towards this level here. I guess one to 1270, but we've got a long way to go before we get there. In the meantime, the 50% move. We're going to see some resistance here, 109.20, and then back up here at this sort of 61.8% level where the euro recovered to the other day. 110.39 was the high, but the FIBO resistance was 110.25. I think it's going to need to be some pretty soft inflation data tomorrow, but also the durable goods and the GDP on Thursday. So we're going to need to see a raft of soft US data. That will put the dollar under pressure, and we could see the euro head higher. If the data comes out strongly, stronger than expected, then we could easily see the euro back down here at these sort of 107, 106.75 level, and possibly even lower down to around these sort of lows around here, so 105.5. The trend lows at 104.60. Now beyond there right now. Previously we were talking about parity, but I think that's been put on hold for a while, unless, of course, Greece begins to fall apart, which that shows some signs of some progress in the talks there. So while I think there's every propensity for Greece to fall over, because I don't think the Labour government, the left-wing government there, can probably convert on what they've promised to do for the Greek people, then I think if that occurs, then we could see the euro head a fair bit lower. But I think that's probably some way off for the time being. So in the next couple of days, I would use a sort of 106.75, 109.5, 109.20 trading range, and go with the flows. But as I say, the short-term indicators and even the dailies do suggest that it might be the top side that comes under some pressure. But further out, as the euro does progress, I'd be looking into to strength to sell into it for a resumption of the dollar's trend. Okay, moving forward to dollar yen. Okay, so dollar yen, that had a steep fall in New York on Friday on the back of softer US yields. Fell from above just above 121 down to a low of sort of 119.90, and it closed pretty much on its lows. Now the charts actually show that there's potential for further downside for dollar yen. I think the hourlies are pointing south. The 4-hour charts aren't doing a great deal at the moment, but certainly the dailies look as though there's some more downside, and even the weeklies are suggesting that it's the downside that could come under some pressure. So in the short term, though, let me just go back. The channel support that we've been in for a while, that's down here around 119.55. Below there, last week's low, that spike low after the FOMC, 119.25, and then we've got support down here at around 119 and 118.30. Before then, we've got these lows here at about 118.60. So it does look to me as though there could be some potential downside. If wrong, though, and the dollar does recover, we're probably going to head in choppy fashion, I think, probably back up to 120.5, maybe to 121, although I can't really see us getting there today. You've got the 100 and the 200-hour moving averages up here, and this minor descending trend resistance. That's going to provide some resistance. I don't really see it getting up there. As I say, the weeklies are heading lower, and if we do break down, well, I guess there's potential to come all the way back down to sort of around these lows, around 117, 117.10. This chart's a little bit messy. I'm sorry about that, but yes, I think there is potential to head down around here. But in the longer term, I'm still looking to buy dips for the second half of the year. And so 117, 118. I think that's probably the target. But it does look to me as though there is every chance of reaching down there, but we have to break down through the base of the channel first. That's it's around 119.50, as I say. Moving forward to cable now. Okay, so cable, after making a low down here around 147.25, it recovered pretty strongly, really, in line with the euro. Got up to a high of 149, can't remember where it was now, 149.88 actually, before closing a little bit lower, about 149.5. Now, as with the euro, I think a fairly neutral stance is probably required to start the week. Although the hourlies and the 4-hour charts, well, the 4-hour charts are fairly flat, but the hourlies do show the chance of a bit of a move higher. But having said that, we're going to come up against strong sellers at around 150. If that's taken out, though, we could head back up to this high here. I think there was about 151.65 here on Friday. That was the spike high straight after the FOMC. It didn't last long up there. I'm not really quite sure what would be required to take us back up here. Really, it'd take a very weak CPI, I think. And in the meantime, we've got some FIBO resistance here. We're sitting on this 61.8% here, around just under 149.80, 76.4% of the post FOMC fall comes at about 149. Sorry, about 150.70, 150.50, something like that. And then we've got the 50% pivot of the bigger move down. That's at just under 151. So we could head high, but if the CPI data comes out strong this week, or Tuesday, I should say, then cable will it'll give up some of those gains. It's going to head back down here towards 149 and possibly this sort of 200 hour moving average area around 148.5. As far as money is concerned, I'd be a little bit nimble. I don't think. I think it could be a choppy session. I'm not really sure that the dollar is going to go too far. But if I had to choose one way or the other, I think there's a good chance we might see some further cable strength as some nervous dollar shorts, dollar longs cut their position ahead of the US CPI. Dollar Swiss. Won't spend too long on dollar Swiss here. There's support here. It does look as though the dollar's got a little bit more downside potential. Support here, there's around 97 the figure. A break of that would take us back down to last week's 96.25 low. And then beyond there, we'd probably see some support down here at 95.30, 540, and at the 38.2% FIBO rate retrace of this move up here, about 94.40. Don't think we're really going back there yet. But the dollar is this is a 4-hour chart. The dailies are looking somewhat negative. The 100-day moving average is around 96, the figure, and I think that's probably going to support it in the near term. If we head back higher, then we're the current level 97.5, 98 and 99 are both going to provide some resistances ahead of parity, which I don't think we're going to see, but above there is one at that high 101.25, and then up here, so this 102 area, which was the high before the big dollar fall off. Don't really see it up there, and I really think once again a neutral stance with a slightly dovish or a slightly bearish bias, I guess, is the way to be. Back to the Aussie, or onto the Aussie. Right, well, the Aussie held on to the support down here again at just above 76 on Friday. Got 76.10 or so was the low, and it moved up strongly from there later in the session, taking out 77 and reaching 78 cents actually, before coming back to close at 77 3/4, which is, as we've said before many times, right on. This chart's a little bit messy. This is a monthly chart, and we're sitting on this 77 3/4 level, which has acted as the pink lines. The 70 is the 200-day moving average, and 200-month moving average, I should say, and that's acted as a pivot now for 2 or 3 months. So, and it looks as though it could well continue to do so again for the foreseeable future, at least in the short term. The 100, the hourly charts are they're still positive, although they're looking as though they might be rolling over a little bit. But if we do head higher, 78 will be a hurdle ahead of this point up here that we got to the other day after the FOMC at 78.40. Beyond there, there's further tops up here at sort of 78.60, but beyond which will probably take us back above 79 to this sort of 79.12 area that we got to late February. I do think a neutral stance is required, although the 4 hours are pointing a little bit higher, so we could actually make some further gains, and we could see these highs. I still think selling into strength is the way to go. Commodity prices did rally strongly on Friday, which assisted the Aussie, and they could have gold and silver both look as though they could have a little bit more topside in them. But if we do see the US dollar recover again, if the US data does come out reasonably firm, the commodity is going to come under pressure, and that'll help the Aussie lower again. One thing to look out for is the iron ore price, which iron ore is down around $54 a ton now, I think, and projected to head lower. And if that's going to be the case, then the Aussie is going to find it very, very hard to maintain levels up here close towards 80 cents. And my longer term outlook is for the Aussie to head a fair bit lower. And I did see Macquarie Bank during the week, they lowered their 12-month outlook for the Aussie to 67 cents. So if the Aussie, if the US dollar does find some legs again, then 77 and that 76.10 area, where are we down here? 76.50 is the 100 and 200 hour moving average. 76.10, and below there, the trend low is down here around 75.59. So that doesn't look to be in any bother for the next couple of days, and it looks to me as though it's going to be fairly choppy as we wait around for the US data. So in the short term, maybe buying rallies for a look above 78, 78.5. But longer term, still the view's unchanged, and that I think we're probably heading lower again. That may be a little bit further out. The Kiwi. The Kiwi had a strong session on Friday as well. Actually, interestingly, the post FOMC high in the Kiwi was down here around, what's it, 75.45 or so, and it's actually gone to trade above that and taking out this resistance here. Now, while the Kiwis made a new higher high, if we go back and look at the Aussie, that has yet to do so. So that may propel the Aussie higher on Monday, or alternatively the Kiwi's going to run out of steam up here. Let's go back to the Kiwi. So in the short term, the 4-hourly charts do look positive, and having taken out this resistance, if we travel above this sort of 76, 10, 15 area, we're going to trigger stops. That's some way off at the moment. The Kiwi's currently around 75, 65, 70. But if it takes out this 76.15 area, which is fairly pivotal, we've got lows back here and highs up here, then we could be headed a fair bit higher towards 77, possibly even higher. I don't think we'd like to see that yet. But the dailies are positive. We've got the 100-day moving average here at 76.30. So if we do take out these highs here, 76.15, that 76.30 will come as a resistance. And beyond that, as I say, we could head up towards sort of 77 figure. If this top side proves to be a false break, then we're going to come back down into this messy area here and do some more action within the sort of 74.5, 75 area on the downside, and this descending trend resistance here in the short term. FIBO support is down around here, 70 or 75 the figure, and then at 74.40 below which we come back down to here, which seems somewhere off at the moment. The 200-hour moving average at 73.60 and the 61.8 at 73.40. So all up, it all needs to be a little bit nimble, I think, at the moment. I'm a little bit neutral on the in the short term. I can see the dollar might have further weakness ahead of it. We'll go and have a look at the dollar index actually and just check that out. Okay, here we are with the dollar index. Now, after reaching this trend high, 10039, it collapsed after the FOMC down to 96.60 before it recovering to close the end of the week 97.80. Now, as you can see down here, the daily indicators are generally pointing lower. The MACDs have crossed lower, so it does look as though there could be some more downside. But I think it's going to be a fairly choppy trade. So the immediate points of support will be down here at about 97 and then 96.60. Below that, this top here, that comes in at about 95.60, and the first FIBO support really is way down here at 93.90. So I don't think we're going there, but it does seem to me that there's a good chance to test this 96.5 level again, and possibly a little bit lower than sort of 95.5. As we go further out to the monthly charts, right, here we are, the monthly chart. As you can see, I mean, the uptrend is still firmly intact, so there's nothing to be overly worried about. The monthly MACDs are still pointing firmly higher. The more sensitive stochastics are a little bit toppish, and that's probably not a bad thing that they've come off a little bit, because it does give the dollar some more breathing room further down the track. The RSIs are still in overbought territory, so I think for the coming week we possibly can expect some choppy trade. I certainly don't think the index is going to make new highs this week, and the chances are of a move back down to that sort of 95.50, 96.50 area that I just pointed out on the dailies. But where I would be looking to put long dollar positions back on, but I just think at the moment we might be a little bit too early on that. So that's about that. So yeah, as I say, it's generally going to be US data this week that dominates trade. The global PMIs are out tomorrow, the manufacturing PMIs, service and composite PMIs, and we've got the UK CPI out on I think it's Tuesday, maybe Wednesday. So that's going to be the main focus for cable this week. But so it looks it's going to be very, very busy. Stay nimble. I'll keep your stop losses in place, because I think it's going to be quite a choppy one. But possibly starting off the week with a mildly bearish US dollar tone, but really all to be decided firstly by the CPI, then the durable goods, and the US GDP that's due on Friday. So have a very good week. Hope you trade well, and we'll talk to you next week. Cheers.